It's tax season, and today we're covering 4 tax deductions for those landlords who own rental properties. All right, on today's Did You Know show, we're covering 4 of the 15 tax deductions found in this article on mysmartmove.com. Julie, what's the first tax deduction we're going to talk about?
So the first one we're discussing is repairs, and actually the IRS splits the repairs into 2 types. So there's improvements to the property, which increase the value, and repairs, which is returning, or maintenance, I should say, returning things to their original condition. So the key difference with the improvements versus maintenance is improvements must be capitalized and deductions are taken as a depreciation over time, whereas repairs and maintenance costs can be expensed in a single year.
All right, the second tax deduction we're going to cover today is local travel or travel to the property. Many landlords like to go in and check on the tenants or check on the property throughout the course of the year. And each time you do so, that becomes a tax deductible event. So if you own a personal vehicle and you're driving to the property, there's 2 possible ways that you can expense that. The first one is you can take the standard IRS deduction. They give you a certain percent toward each and every mile, so I think it's like 58 cents per mile. Or if you want to itemize it, then you can go and you can write off the maintenance on the vehicle, gas, all those sorts of things. You have to kind of figure out which works better for you. If you have an out-of-state or out-of-the-area rental property, say out-of-state, you can actually deduct the travel and the hotel stay and all that to go visit your rental property. So lots of ways to deduct travel on your tax return.
The third tax deduction we're discussing is insurance. So of course it's absolutely critical to carry insurance. Of course we think of landlord liability insurance, but really any types of insurance related to the rental property, such as fire, theft, and flood, if applicable. All of those types of insurance are tax deductible.
Now, one other policy that's also included a lot of times with landlords that have multiple properties is they get an umbrella policy that covers all the properties above and beyond the separate individual properties, and that is also a tax deduction. The last and 4th tax deduction today is a deduction if you're hiring anybody to take care of your property, like property managers, or hiring independent contractors for repairs and maintenance. Gardeners, all that sort of thing. But keep in mind, if they are an independent contractor, you do need to send them a 1099 at the end of the year if they earn or if you pay them more than $600. If it's under $600, you don't need to worry about that. So keep that in mind when you go to file your return at the end of the year.
Now, of course, we are real estate brokers, not CPAs or tax professionals, so we always encourage you to check with your CPA or tax professional to discuss valid tax deductions on your rental properties. Properties may vary. We've touched on the past about short-term rentals versus long-term rentals. So again, it's tax season. Make sure you touch base with your tax professional and take advantage of all the tax write-offs applicable.
Guys, thanks so much for watching this week's episode of our Did You Know show. Put a comment down below of what your favorite tax deduction is for rental properties. Maybe something we didn't mention here today. And if you want to see all of our videos moving forward here on YouTube, you know where it is. It's the subscribe button right down below. Please hit that, and we'll see you next show.